Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darcy here to bring you the daily recap. So today, the big headline heading into the day was the jobs report. Anytime you have a big economic data point or a jobs report, the focus is going to be a lot on the macro during that day. So I think that's a lot what we saw today with the market. And after the early morning action, a lot of people on a Friday like this will take a look at the response to the jobs report, maybe trade the morning a little bit, and then call it a day. And if you did that, you might have done yourself a little bit of a favor because the action overall wasn't great in the second half of the day. But there was some individual action, which I'll get to in a little bit, some crazy action in some individual stocks. But overall, we can take a look at the chart of the spiders. And as you can see, what we did finish with was a very small gain, which I guess you could say is constructive after what was really a really bad jobs report this morning. We were expected to create almost 200,000 non-farm payrolls. We created 74,000. It was the lowest job gain in 3 years and obviously well below expectations. The labor force participation rate was even the most concerning thing as people are flooding out of the labor force. But we saw the futures take a dip pre-market just after the report came out, but then futures were actually able to recover into positive territory before the open. And you sort of got a repeat of that during the session where you can see the tail on the spiders that we traded lower early in the morning, so people thought maybe this is going to be interpreted badly. You know, there is that notion that maybe bad news is good news because it means that QE might continue longer. But we got that initial snap down, and then the rest of the day we just sort of floated higher and were able to finish back in positive territory on the S&P. The Dow finished with a small loss, the NASDAQ a small gain. So overall, as far as the indices are concerned, it was a quiet day. But it is going to be interesting to see the dynamic on how this data point is analyzed because you've sort of had a lot of push and pull on people's opinions on what the Fed's going to do. They seemed on course to taper QE gradually this year and maybe be done with QE by the end of 2014. But if we get more data points like this that show that all that economic recovery, that the idea that it's gaining steam is just not true at all, and in fact the exit that we saw from the labor force in this earnings report shows that things might actually be going in the opposite direction. So a lot of concerns there economically. We were hoping to get an environment where good news could be good news and we could start picking up some steam as far as the economy goes and the market could stand on its own 2 feet, a little bit more healthy type of action than the Fed inflating asset prices and all that. But we're back in that mode where we're going to be speculating about every single economic data point that comes out and what it means for QE and all that jazz. So looking forward to that. But anyways, I'll go through a few more of those macro type of points that we always talk about on a jobs day. For example, bonds. You can take a look at TLT. TLT, big move higher, which is what you'd expect with the expectations that this really weak jobs report might prolong QE. So a big move higher there. We saw gold do exactly what you'd think it would do if QE would continue longer. It was higher, finished more than 1.5% higher, I think. The dollar was weak, which helped stocks hold up a little bit, perhaps. And then XLU, the utilities. Utilities are a sector really high dividend yield generally on utility stocks. So when bond yields and interest rates are low, people flock to utility stocks. And so what you saw was a little bit of that today. Is they showed a lot of relative strength. Normally a low beta sector, but a really impressive move. Did close a little bit off their highs, but interesting to note today all the action that points to expectations changing a little bit about QE tapering. Yes, we did start QE tapering in December, but it was only a taper. There's no fixed schedule that they're going to maintain. So I think maybe at least the expectations, which are what's important to us, the expectations are that QE is going to go on a little bit longer. And so you might see a little bit of a shift in some of the dynamics between sectors in the market. And then just going through a few narratives that we talked about in the morning call and we've been talking about recently. Social media, Twitter wasn't able to really get a bounce. It looked like it wanted to early, but a little bit lethargic, finished around the flat line, so nothing really to take note of here in Twitter. I think this is a pretty compelling opportunity to buy the dip in Twitter, to be honest with you. As it has been much publicized, it has that small float. People were just sprinting to get involved in Twitter after that initial consolidation period after the IPO. And so now it's hard to fathom that nobody would want to be involved at these levels after people were chasing it up in the 60s and even the 70s. But it did get 4 or 5 downgrades this week, so maybe some opinions supposedly souring on the stock a little bit, but overall is still holding above the 50% retracement from this rally. So I think a compelling area to get involved, and I know some guys on the virtual trading floor are getting involved with it to the long side. But then Facebook and LinkedIn. Facebook was able to have a bounce back day. It was weak yesterday with a big bearish engulfing bar. Wasn't able to match that day, which would have been extremely impressive if it was able to reclaim all those losses, but was able to take back about half of those losses. So next week will be very key to see whether Facebook can break out to new highs or whether the lows from the past 2 days are tested. But constructive action to see Facebook bounce. And then LinkedIn continues higher. This is one that has been weak while Twitter and Facebook have been so strong, and they're sort of flipping the script right now where LinkedIn is showing more strength. And as I talked about this morning, on a monthly chart and on a weekly chart, a monthly chart you can see a red dog reversal, and then on a weekly chart you can see a similar thing where both had 4 candles down and then a red dog reversal where it traded below. And on a monthly chart, it was below the previous month's low. On a weekly chart, it's below the previous week's low, and then reversed back above. So some macro, maybe inflection points there for LinkedIn after it became a little bit out of favor. Maybe you'll see some money rotate back into LinkedIn. Tech in general continues to be a little bit weak. Those dynamics that I talked about earlier with utilities being strong, gold being strong, in those situations, some of the riskier type assets, which are your small cap stocks, which are your tech stocks, and a lot of times, those have been a little bit weak, and we'll just run through those quickly like I did this morning. Nothing really compelling there to take note of at all. We'll go back to the daily chart to give you a better look. Apple continues to be weak, broke above its pivot low, and looks like it could be headed back to that 520 area. That'd be a compelling area to get involved in Apple, in my opinion, on multiple time frames. Google, macro, very strong. Finished around the flat line today, but after the up open, not exactly the action you want to see. But did close off its lows a little bit as it bounced in the afternoon. Amazon, same situation sort of as Google, where nothing to really be too upset about, but a little bit of weakness after some really strong action, obviously, in November and December. And then the two ones that are actually looking a little bit weak, Tesla's one that we mentioned as a long idea on off the charts this week, but these are not the two type of candlesticks you want to see on a breakout type move. It's not a breakout move, but a breakout of this descending channel pattern that we highlighted in off the charts. It's a pattern that I really liked, and it has a high short float, as you probably heard with Tesla. Looked like it wanted to break, but closed a little bit off its highs on Wednesday. Gave back about half of those gains during the day, so that was maybe your first warning sign that this is not going to have the type of momentum move that Tesla sometimes does. And then the past 2 days, it's gotten corrective action to break back below these pivot lows. Today did close off of its lows a little bit, so perhaps this could be a shakeout type move before the actual rally in Tesla. It's one that I do think could continue higher in 2014, but not the best action in the past 2 days. And then Netflix, even more significant weakness coming in there. I talked yesterday about it's tough to be short in this market, but if you were looking for shorts, Netflix definitely looked like a compelling one. And today broke below yesterday's lows, down into what I believe is the 100-day moving average here. So we'll zoom out on the weekly chart just to get a little bit more perspective on where it is. That's an ugly looking candlestick. It's obviously been in a very strong uptrend, and this steep uptrend was broken over the past few weeks of action. So I think based on the technicals, you could see Netflix get back down here into the 309, 310 area, and then even more significant support would be in the 300 to 280, 290 area. So something to keep an eye on there, some weakness coming into Netflix. And biotechs. I was talking earlier about the crazy action that we've seen in individual stocks over the past couple of days, whereas the markets have been a little bit quiet, and the biotechs, I think, sum that up better than anyone, to say the least. And the biggest culprit for that is ICPT. This company had a clinical trial, or not a clinical trial, just a research trial for a drug to treat a liver disease, and the trial went a lot better than expected, a lot sooner than expected, and the stock has had historic gains. I'm talking stock is up over 500% in the past 2 days. You take a look at the weekly chart to give you some perspective on that, and then I'll take a look at the daily, but look at that move. It's not every day you see that type of move in the stock market, and I think it's going to get people to buy do a little bit more lottery ticket buying in the market, which is not exactly the most sustainable way to be successful trading or investing, but hey, it's going to work out for some people. If you held a basket of biotech stocks and ICPT was in it, then obviously you're doing pretty well for yourself. But yesterday, as Scott mentioned, I think on Twitter, and I'm not sure if we mentioned it in the morning note or not, but this is the type of pattern that's either going to get you paid a lot of money, or it's going to be a widow maker. It's going to be one that could put you out of the business, because you see a big gap and go like that. It closed off its highs yesterday, which told some people that that 270% move or whatever the finish was yesterday in ICPT, maybe that's a little bit overdone. Maybe it's going to go down and challenge this gap a little bit. But what do we get this morning is a 70% move higher, flirted with the $500 area. So huge price action there. And then somebody even came out with a buy rating today on it, said the stock's worth $800–900. And some people say that if this drug plays out like it looks like it might, and is a successful drug for this condition, then it could be a $1,000 stock. So definitely not a game that I would ever even consider playing, is trying to short a name like this or even buying a name like this. Both carry a ton of risk right now, but if you're trading intraday and you have some momentum trading skills, some technical skills, maybe you could be involved with a name like this. But overall, the risk is high, the reward is high, but the risk is also extremely high. And it's just not, to me, a sustainable way to try to make a living in the markets, and no way to live your life. Because if you go home long or short ICPT this weekend, I don't think you're going to be getting very much sleep. But the fact that this is up 500% in the span of 2 days has a lot of people salivating over the possibilities in the biotech sector. And I think that it helped boost the ETF today. And then there's some other individual setups that I really like. The IBB, as you can see, a lot of relative strength. I talked about yesterday the possibility of just a residual impact of that big move in ICPT, helping the ETF, and also just getting people to flock to the biotech sector a little bit. And then BIIB, I was going to talk about how I love this for a breakout. It actually started to break out late in the afternoon, but I think it looks very ripe for continuation next week. I'll go to the weekly chart, give you a little bit more perspective on it. Really nice consolidation, sort of a descending type channel that you see here in the upper levels after an igniting weekly bar here late November. So BIIB is the largest component in the IBB ETF, one of the more established biotech names out there. Yeah, maybe it's come a long way, obviously, in 2013 and even prior to that. But these biotech stocks, as you can see, have oftentimes a lot of potential, and this is one that I think looks like it definitely could continue higher and get some momentum next week. Sort of just ran out of time today. If there was another 2 hours in the trading session, I think you would have seen BIIB get more momentum and stage a really nice breakout. A group that actually looks very compelling to me right now that had a tough year in 2013, one of which we mentioned in Scott Redler's 2014 predictions, is the agricultural sector. It's a sector that a lot of people were bullish on, fundamental people were bullish on heading into 2013, but commodity prices around the world fell precipitously last year, and it weighed on these stocks significantly, in addition to some shakeups that we saw in the nitrogen phosphate sector, where some different partnerships were broken up, and that whole story that played out around the middle of the year. But CF is one that has always been my favorite in the group, a leader in the group, and we can zoom out a little bit to get a picture of that week 2013. It ended up rebounding in the second half of the year to actually finish around the flat line, but what you saw was a really nice igniting bar that happened in mid-December, early December, and then a nice consolidation in the upper half of that igniting bar, and then this week, really nice price action in the last 3 days as it held the 21-day moving average, allowed it to play catch-up, and then ignited higher. Really clean moves the last 3 days. But then once it could play a little bit of catch-up, POT, again, CF is my favorite in the group, but POT looks constructive as well. Look at the weekly chart on that one. It's a lower level type pattern, but it looks like it wants to, and this is a gap that we're seeing on the weekly chart, but you can see it better on the daily. But it's reclaimed about half of that gap down, and looks like it might want to try for a gap fill. Look at the daily chart. I'll zoom out a little bit so you can get a picture of that gap. But as you can see, a lower level pattern, but a break above these pivot highs from where it previously challenged the gap could generate some momentum for a potential gap fill. So that's one that looks good to me. And then AGU also looks a little bit compelling to me. Another one that's not quite as strong as CF, but I'm going to go to the weekly chart on this one too. As you can see, a weak year in 2013, but looks like it's got a little bit of a rounding bottom type pattern forming with some prior pivot highs here in these mid levels. I'll draw the line for you so you can see it a little better. But this type of look right here, to me, tells me AGU could get a little bit of momentum next week as you see some interest coming into these agricultural names. So something to keep an eye on there that hasn't necessarily been at the forefront of momentum traders' radar screens. But and then something interesting today is we saw China, and some people I was reading on Twitter today are getting more bullish on these emerging markets. China is one that we talked about in Scott's 2014 predictions as well. It's in a wedge pattern. I'll go ahead and draw it. And it's one that right now there's no compelling buy signal, but with the possibility that QE might continue longer. QE often has even more positive impact on emerging markets than it does on U.S. markets. So you could see those perk up a little bit. And then today you saw on a daily chart a really nice bounce back from FXI. It was up almost 2%, so at least finding its footing a little bit. And it's just one to continue to keep an eye on that macro wedge pattern. It's one that if you're worried about chasing extended markets in 2014 after the huge bull market and the previous year, then this is one to keep an eye on as a potential catch-up type play. But just use the pattern, use objective price tools and technical analysis for that one. And then one I wanted to touch on, I was thinking of laggard stocks a little bit, got me thinking about this one, is Microsoft. Microsoft, you might have heard me talk about it before, is one that is a really rare opportunity to get both value in terms of a nice dividend yield and just steady company that generates cash flow, and also potential growth. Obviously, the Windows business is their big business, and it's not dying, I wouldn't say, but it's a slowly deteriorating business as technology changes, and technology is always going to be cyclical. But Microsoft still makes a ton of money. They have a huge pile of cash that they sit on that they haven't really been able to deploy very effectively with the current leadership. But Steve Ballmer's set to step down this year. They hopefully will name the new CEO sometime in the next few weeks or months. And it's sold off partly this week because of the fact that the Ford CEO, Alan Mulally, or however you pronounce his last name, is not taking the job. So that was a negative headline. But I still think there's going to be tons of great candidates for this new CEO role that they can't do much worse than Steve Ballmer did in terms of innovation and not making Microsoft a dinosaur of tech. So you get the possibility, from an anecdotal and fundamental perspective, of both a nice dividend yield and potential for growth with strategic acquisitions and just different strategies with the company. And today we finally got some promising signs that this might want to bounce a little bit. Yesterday it closed on its low, so it wasn't exactly the easiest short-term trade, but today's action, if it can get back above the 8 and 21-day moving average, I think this would be a decent lower-level entry to try some Microsoft on a little bit of a dip. And then one more name that I was just flipping through some charts heading in to the recap, and I was looking for something a little bit off the radar that I might be able to share with you guys and add a little bit of value. And I stumbled upon one that's very interesting. It's a speculative type name. It's IRBT. I'll stop the suspense. It's iRobot. They make robotic vacuum cleaners and stuff like that. And obviously the potential for robotics is a lot greater going into the future, and companies like Google are investing in robotics divisions that hopefully they have their self-driving cars and all that. But the potential for robotics is obviously huge. You have things like 3D printing and mobile payment technology and things like that stealing the spotlight for themes, but I think robotics deserves some attention as well. And IRBT, first I'll look at the daily chart to show some short-term levels. You can see in September it's challenging those pivot highs that are here around 38.50 is where it closed today. So if it can get above, if I can zoom in on one of these candlesticks, the high was 38.87 back from September. So if it gets above that pivot, nothing really in the way of it getting back to these 52-week highs above 40. Something to keep an eye on there. That would be a nice percentage move in and of itself. But then I zoomed out a little bit too. And what this looks to me like is a little bit of a cup and handle type pattern where you have your cup. I'll draw this the best I can with my line tools. A little bit of a cup. And then a little bit of a handle. Macro cup and handle pattern is exactly what you want to look for if you're a longer term type trader, technical trader, because it could definitely forecast a huge move for a stock like IRBT. And then I even zoomed out to the monthly chart, and you can get an even better look at it. This stock IPO'd back in 2006, and it had a really nice first couple months after the IPO, but then sold off sharply. But right now there's a lot of money flowing into these speculative type names, and you look at that pattern, there was sort of a cup and handle-ish type pattern on that big retest, this big downtrend. When it broke, it set off a big explosive move for IRBT. And then you sort of have this upper level flag type pattern forming. You could call it a wedge or something too on the monthly chart, and it's breaking above that little wedge right now. So this is also the level that it got to on those first 2 months after the IPO. So on multiple time frames right now, this IRBT looks like it could be explosive, and if it can continue this momentum and get above that 41.12 price point, you could get some significant momentum at all-time highs for a stock that's been mired in a range for the past 7 years. Just a little something I stumbled across, thought I'd share it. Maybe we'll put it on off the charts and stuff like that if you're a subscriber there, but a little free Friday bonus, just something that caught my eye. Anyways, quiet day for the market again, but still a lot of really nice stock action out there. This is the type of environment where I think it's very valuable to be in a community like the virtual trading floor, to have a product like Off the Charts in your inbox that we're highlighting these patterns for you. It's definitely a stock pickers type environment where having a sharp tool set of technical analysis tools is definitely very beneficial. But anyways, Scott's 2014 outlook, I mentioned a couple names that were on there. There's a couple other very interesting names that we mentioned on there. Your last 3 days to get that product for the pre-sale price is this weekend, and I think maybe Tuesday is the last day to buy it. But some really good analysis on there. Share some of the analysis that he did on the market in 2013, and then some projections going forward. So definitely, if you're interested in that, $50 pre-sale price, the last day is after this weekend, so keep an eye on that. Anyways, this has been John Darcy here for your daily recap. We'll get back after it Monday morning. Have a good weekend.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.